I've seen a bit of a rebound when it comes to futures right now, Chris. I want to get a sense of how you see today shaping up. What is your WEX word of the day?
My WEX word of the day is defense. And I'm not talking about what's happening at football camps all across the country. We're talking about stocks that are economically resilient, have financial flexibility, and adaptable management, because that's what it's going to take over what we see as a volatile coming for several months.
All right, so you see it being a bit volatile. So are you making moves when it comes to portfolios to make moves into defensive stocks right now?
Well, listen, this has always been the formula, our three-legged stool. I think we're leaning a little more heavily on that. We're halfway through earnings season, and it's pretty clear that we're seeing economic softness. The consumer is rolling over. You mentioned what happened with Airbnb last night. We heard it from some other travel companies. Disney will report shortly. We'd expect some softness in the parks. I'm not ready to call a recession today, but let's call it a softish landing. The Fed obviously does have the tools to respond to that, and that keeps us reasonably constructive on the market.
All right, so you have some concerns about Disney's parks. That's interesting because the Disney parks are places you go, you have an experience, they are somewhat expensive. At the same time, one of your defensive picks for us is the stock that's the parent company of the Atlanta Braves. So sports also pretty expensive, an experience, certainly not a necessity. Why is that one of your defensive picks right now?
Yeah, it sure is. But, since sports rights have appreciated at over 16% for the last 20 years, sports asset values, that is, and there are very few ways to play it. The Atlanta Braves, which is publicly traded under BATRK and BATRA, is one of those ways. It's a company controlled by Dr. John Malone. It was spun off as an independent company last July. So they're free to monetize that at any point. And we think it's worth much more than the $2.2 billion that is implied by the market today.
All right, so another one of your picks is our parent company, Comcast. Why are you seeing that right now as a defensive play? The dividend is something I know a lot of people gravitate towards, but what are the other factors that make that a defensive play in your mind?
Well, yeah, I mean, listen, it looks like a lightly regulated utility. Obviously, the vast majority of Comcast's earnings come from its broadband franchise, which is doing reasonably well in the face of increased competition, but they're more than holding their own. And this is obviously a good recurring revenue stream. And they're making progress in the media part of the business with Peacock, which is having a pretty good Olympics, and the parks, which has some secular growth drivers, obviously some cyclical pressures, which were pointed out on earnings and which caused the stock to come down a bit. But long term, we've got Epic Universe opening next year, and we feel very good about that part of the business.
All right. We also had some news yesterday. Kamala Harris picking Minnesota Governor Tim Walz to be her running mate. In your mind, does that have an impact on the markets? Of course, it could have an impact on the elections, but does it have any impact on the markets?
Well, obviously, the election's going to be center stage from now for the next few months. I think we're probably back to a dead heat from overwhelming odds for Trump a few weeks ago. I think you've seen some of the Trump 2.0 plays being unwound as a result of that. But ultimately, we think about, first of all, is this election going to go smoothly? We're going to have a clear winner come, say, January. And secondly, what's the impact on things like regulation, taxes, productivity? Ultimately, the American economy is going to do what it's going to do. But, obviously, the politicians are not unimportant.
Last question, volatility that we've seen in recent days. Do you have to be prepared for that? Do you have to make moves in a portfolio to adjust to that? And also, what have been really wild swings when it comes to sentiment? I mean, it was just a couple months ago when GDP came in soft, that was bad news. Then the jobs report came in soft, that was bad news. But sometimes good news is bad news. It just kind of goes flip-flop. And is this the wild swings in sentiment, the volatility, is that something that you have to actually adjust to, or do you just ride it out?
Yeah, I'd say, Frank, actually, that you have to have the fortitude to just ride things out and maybe not make moves. I think there's often a danger in being too active, making too many moves, too many adjustments based on short-term data. Again, you think long-term, what are the kind of franchises that you want to own for the next 10, 20 plus years? They're ones like we've mentioned, Comcast, the Braves, utilities, others that we currently like. So you make adjustments at the margin. Obviously, we're always responding to the news flow, but have that long-term mindset.